Have you ever felt that gut-wrenching panic when the stock market starts to tank? Or maybe that nagging fear of missing out when it seems like everyone else is getting rich? Well, today we're going to look at a really powerful way to think about this, straight from investing legend Warren Buffett. It's all about getting to know your new and very unreliable business partner.
So Buffett tells us to imagine we're in business with a partner. But here's the thing. This partner is, well, a little unstable. His mood swings wildly every single day. One day he's on top of the world, the next he's in a deep depression. And his mood is what decides the price he's willing to buy or sell his share of the business for. This manic partner, that's the stock market.
All right, to really make this stick, let's give him a name. Let's call him Drunken Dave. You know the type. He shows up every morning, screaming prices in your face, either giddy with irrational excitement or paralyzed by sheer terror. And unbelievably, he's the voice so many people listen to when they make their financial decisions.
So, what's the big deal? Why is listening to Dave so incredibly dangerous for your wallet? Well, it's because his moods are designed to pull you into two very tempting, very expensive emotional traps.
See, Dave really only has two moves. When he's euphoric, he's offering you a fortune for your shares at some sky-high price, trying to trigger your fear of missing out. But when he's down in the dumps, he's practically giving his shares away for pennies on the dollar, trying to make you panic and think your own investments are worthless. Either way, he's playing on your emotions.
And here's the bottom line, the most important takeaway. If you let Dave's crazy moods dictate what you do, buying high because you're greedy or selling low because you're scared, you are almost guaranteed to lose money. It's that simple. He's preying on your reaction to the price, not the value. And this really gets to the heart of the matter for every single investor. You've got Dave's mood, the market price, on one side. It's emotional, it's volatile, it can change in a split second. But on the other side, you have the actual business value. That's reality. It's based on real stuff like earnings and performance, and it changes slowly, over years. The whole secret is learning to focus on the reality and tune out all of Dave's noise.
Okay, so how on earth are you supposed to deal with an irrational partner like Dave? It turns out there's a pretty straightforward three-step strategy to not just survive his antics, but to actually come out ahead because of them.
These are your 3 rules of engagement. First, you absolutely have to do your homework and know what your investment is actually worth. Second, you learn to turn his emotional weakness into your greatest strength. And third, you remember that you have the ultimate power, the power to just do nothing at all. Let's start with number 1.
Step 1 is the foundation for everything else. You have to know what you own.
What this means is, before you even think about buying, you need to have a solid idea of what that business is truly worth, based on its profits, its assets, its future, totally separate from whatever price Dave is screaming about that day. That knowledge, that's your anchor. When the seas get choppy and Dave is freaking out, your analysis is what keeps you from getting washed away.
Now, step 2, this is where things get really interesting. This is where you go on the offensive and actually use Dave's irrationality against him.
Because you did your homework back in step 1, you can spot a deal when you see one. So when Dave is in a full-blown panic and wants to sell you his shares for way less than they're worth, you see an opportunity. And when he's ridiculously optimistic and offering a crazy high price, you know it's time to be careful. You can literally profit from his emotional breakdowns.
And finally, we come to step 3. It's the simplest rule of all, but honestly, it's probably the hardest one for people to actually follow.
You have to drill this into your head. Dave can scream and shout all he wants, but you are never forced to play his game. You don't have to trade with him. If the prices he's offering just don't make sense based on your research, you just ignore him. You walk away. Your greatest power as an investor isn't always in making a move, but in having the discipline and patience to wait for the right one.
So, when you put these 3 steps together, you get something really powerful. You gain a huge advantage. You become the sober, rational partner in the business.
And that's the real secret here. You don't need a crystal ball. Trying to guess what Dave is going to do tomorrow is a fool's game. Your job is so much simpler. It's just to react rationally to the foolish opportunities that his irrational moods create for you.
This is the person you want to be. The investor who sees a market crash not as a catastrophe, but as a clearance sale. The one who can just calmly ignore the hype when everyone else is getting swept up in a bubble. It's about using logic when the rest of the world is running on pure emotion. And that really just leaves us with one last big question. It's easy to nod along to this stuff now when things are calm.
But the real test is when the pressure is on. So the next time the market starts to panic and drunken Dave is banging on your door screaming about some terrible price, what are you going to do? Are you going to get sucked into his emotional drama, or are you going to trust your own cool, rational analysis?